Hey guys, welcome back to DCA. Today we're going to do a deep dive into a network that I believe has potential to become one of the top Ethereum competitors in terms of market share over the coming years. I'm talking about Near Protocol. Now in this video, I'm going to do an in-depth analysis based on where we're currently sitting at in order to help anyone decide whether this investment is at a good place for entry at the moment. In an upcoming video, I'm going to be doing a deep dive into Near Protocol, and I'll be performing an in-depth market analysis of Near based on its fundamentals, the technology, market adoption, and using all of that to develop a model for projecting where this asset may be able to get to in the future. So if you're new here, my name's Jay, and what we do on this channel is data-driven, research-based analysis of the cryptocurrency asset class, where I attempt to bring institutional-grade analysis of the crypto markets to retail investors. To quickly tell you my background, I have an undergraduate degree in economics and a doctorate in medicine, which is just to say that I've had over a decade of training with data and market analysis. I've now shifted my focus to utilizing these skills and, in my opinion, the unique perspective that they bring to analyzing the crypto market in a structured and objective manner. Here, we're not interested in hype. We're not interested in selling hopium. We only care at looking at the data objectively in order to optimize our investment decisions. So if you guys like this type of content, don't forget to hit like and subscribe. You could also head over to the Discord channel where we discuss the cryptocurrency asset class from a macro perspective. I also release all of the TradingView scripts and research reports that I create on the channel for free. So with that said, guys, let's jump on in. So the first thing I want to discuss today is the DCA risk index model. This is a machine learning algorithm model with the intent of finding the best times to enter an asset or the best times to exit an asset, as it's likely entered a speculative bubble. So this model takes into account numerous economic and market factors in order to determine where the asset is currently sitting at. I've done numerous videos in the past detailing this model, what goes into it, and how I use it to enter and exit various positions. So we currently have the model for numerous assets, including Bitcoin, Ethereum, and most of the top altcoins. In general, I only make this model for coins or tokens which, based on my analysis of their fundamentals, adoptions, tokenomics, etc., that I believe have potential to impact the market on the long-term scale. So I'm not really interested in attempting to short-term trade the projects. If I make an investment, it's because I believe the asset has significant long-term potential. Because after all, in the crypto market, you're accepting a large degree of risk here. Anything you invest in comes with significant downside potential. So we look to counterbalance that by only selecting assets with massive upside potential in the coming years. So if we look at the DCA risk index model for Near Protocol, you can see that back here in March of 2021, we were sitting at nearly 100 on the risk index. So this is telling us that the asset has moved up too quickly and too far. So it's likely to experience a round of profit taking. And sure enough, from that time, Near Protocol then went on to correct about 80%. So from back here in March all the way through July, we were down about 80%. In fact, going as low as $1.50. So since that time, however, Near Protocol recovered significantly, going up around 670%, up to this price of around $12. And again, the risk model was telling you the price it's moved up too far, too quickly, and likely needs to correct from there. And sure enough, from that point, we again corrected about 50%. So going down as low as about $6.50. So from that time, the price just sort of chopped sideways. And it wasn't until the DCA risk index model got below 50, which is usually the delineation I use to decide whether I should enter or exit an asset, the 50 level. It got below 50, and that's when it took off again. Once it had corrected enough back to a point where it was nearing an accumulation phase. So it corrected down to right here where we got down to around $6 again, right back to this prior support level that we talked about, right at around $6.50. And that's when it then went up to around $20. Now you'll see this time it didn't actually get into the highest risk level. However, this is almost to be expected because the market conditions just simply weren't favorable enough to allow Near to continue going to where it may have been able to get otherwise. So we sort of only got into these mid 70s. But then we went on another very large correction. So we went from about $20.50 to right here when we got to around $7.30, $7.40. And at the time, the DCA risk index model was down here in the 20s. So indicating to us that, again, this is a great time to accumulate the asset. Whenever you get this far down on your stronger assets, they tend to be good times to consider accumulating. And from there, what did we do? We turned around, we got back to around $20 again. Now, that $20 level, that's going to be critical though, because that's obviously a prior all-time high and it's going to represent a resistance level. So currently, NEAR is sitting right at around 60 on the DCA index risk model. So typically, I use 60 as a level where I would start selling approximately 10% of the asset. So typically, I would sell 10% of the asset here. However, what you have to do is decide what you believe the market is currently doing. So when we're sitting at 60, I don't think that's an ideal entry point, but at the same time, I do believe that NEAR is going to go to much higher highs in the future. So you have to decide whether you're willing to accept the risk of purchasing at this point. And you know, we're at a prior resistance level right at this 20 level. We're at a resistance level. We're sitting at 60 on the risk index model, which is a point where typically I would not be acquiring more of an asset. And the market conditions are, quite frankly, tenuous at best at the moment. So Bitcoin itself just bounced off of that 20-week moving average. We got rejected off of it. So the market conditions overall aren't favorable for NEAR to start making new all-time highs in the short term. But we're going to look at a few things today and look at why, if market conditions turn around, you may see NEAR explode to new all-time highs in the coming days or weeks. So the first thing we'll do is head over to this USD chart here. And you can see that we've essentially been trading right within this upward channel since the end of 2020. And we've just been oscillating between this upper level here and back down to this lower band of the channel. All right. So we bounced off of the top in March of 21, and then we came down to the bottom of the channel in July of 2021. Then we sort of rode along. We got rejected off of this top level here and again here. And then finally, we're able to enter a close in that channel in January of 2022. Now, obviously, again, it's all about the market conditions. The market conditions were rather poor at this time in January, and we saw another round of profit taking. If we go back to the DCA index risk model, we saw that right here once we started to get into this 75 approaching this 80 level. And in general, that's going to be a fairly strong indication that the market is overheated. If the market conditions are overall looking unfavorable and you're in these higher risk levels, anything above 70 pretty much, you can say that it's very likely that at any time you're going to see a pullback, because the way that the market is constructed, nothing acts on its own at the moment. Everything is sort of tethered to Bitcoin. Everything moves in relation to the way that Bitcoin and Ethereum are moving. If they're moving up, the whole market moves up. If they're moving down, pretty much the whole market is eventually, within at least a few weeks, is going to start moving down. So now the next thing I'd like to point out is this chart that I have on the bottom. And this is one of my favorite charts. And I think this is one of the most telling charts. This is the price volume indicator. And in fact, I've made this a TradingView indicator, which you can download for free, as you can with everything else I release on the Discord channel. So what this indicator does, it's rather simple. It looks at the 10-day moving average for the price multiplied by the volume. Now, why don't we just look at the volume? Well, because let's take a look at Bitcoin, for instance. And what I'm showing you here is the volume for Bitcoin over time. So we're looking at the entire price history of Bitcoin. And we can see that the volume was by far the highest back in 2014. But we know that the number of dollars being traded on Bitcoin back then was significantly lower than it is now. Okay, so volume is not a very good metric in the cryptocurrency asset class, because the prices span very wide ranges, okay, orders of magnitude. And you'll naturally always have more volume traded when the price is at lower levels. So we need to be able to compare the price and the volume on standardized scales. So we take the price multiplied by the volume, and that tells you how many dollars are being traded on the asset. Now, with that, we can then identify when the asset is being accumulated. Because if you look at price volume across any number of assets, when the number of dollars being traded is higher, in general, this indicates that the price is going to be moving up. Typically, we're not talking about just single week periods. We're looking at ranges of time. So you can see that back in September, here's our price volume, but look at our actual volume. It's all the way down here, okay? It's at these lower levels here. But when you look and compare that back to, say, January of 2021, the volume is much lower. So that's why the volume doesn't really matter. It's about the price volume, because this tells us exactly how many dollars are actually being traded on the asset. And we can see that now we are entering a textbook accumulation phase. From March, starting at the second week of March, we have entered into a textbook accumulation phase. We're seeing upside pressure with increasing volume and increasing amount of dollars being traded on the asset. Now, this doesn't mean that the price will necessarily just shoot to a new all-time high or to multiples of a prior all-time high. In fact, look at our last accumulation phase. It started back here in August. You started to get accumulation right here in August through September. But then what happened? We did have a price spike here up to around $11, but then we retracted back down to around $6.50. So this was a last shakeout before our next accumulation phase eventually sent us to an all-time high of around $20.50. So we're seeing that play out again right now. We're seeing the price volume, it's leveled off classically like it has before in the past. It's leveled off and now it's building up again. And these are typically what you see as we start to go on a significant run. Now, like I said before, we're going to need the market to cooperate. If the market is terrible, regardless of the accumulation right now, you likely won't see us be able to go to a new all-time high. So the next thing we need to look at is near BTC. So we want to know how near is comparing to Bitcoin, because ultimately you're taking on more risk with near or any other asset than you are with Bitcoin. You may not have the same upside potential with Bitcoin, but your downside potential is lower with Bitcoin than it is with almost any other asset. And that's strictly for the fact that you have more dollars invested into Bitcoin. So it's harder to get the same type of pullbacks that you see with other assets. So when Bitcoin pulls back, it's typically going to pull back less than other assets are. And you can see that we're right at a resistance level. We're right at a prior all-time high level. And so anytime we come upon these, it can be difficult in the shorter term to break above that. In fact, you can see that, so we hit this level in March, then we hit it again in April, then we hit it again in May, and then it took 3 weeks of hitting into this level against Bitcoin in August until we were finally able to break above it. And then after we broke above, then we used it as support in the next pullback in October until we were again able to break above it. So you can see that here was a new all-time high in September, and then we hit it as resistance again in October, and then again in December until we finally broke above right here in the end of December until we went to that prior all-time high. So the pattern is playing out exactly like it has in the past. And what you can see is that on prior attempts at breaking above these all-time high levels, we've got rejected initially until we were eventually able to get above. So that doesn't mean that has to play out like that every single time, but it's worth noting that in the past, when we've come to this upper band against Bitcoin, we've been rejected, but eventually have been able to get above. So we need to do the same thing against Ethereum, and it's textbook identical to what we just saw with Bitcoin. So you can see that essentially with Ethereum, we're sitting right at this 0.0056 level. Okay, so that is our current level of resistance. And you can see that just like we saw with Bitcoin in March, and then in October, and then again in December, and not until late in December were we finally able to break above this resistance level. And then what did we do? We used that level as support. So we're sitting at a new all-time high against the valuation of Ethereum, and we need to see near probably test this level, likely come back down to the support level until it's able to break out again. Now, with that said, if the market conditions turn favorable, the market starts to move up in general, I think you're going to see it explode through these levels. So this USD level, this near BTC level, this near Ethereum level. If the market turns favorable, I think you see it explode right through this resistance level. I don't think if the market starts moving up, I don't think you're going to see near holding this resistance level. I think you're going to see it explode through. But if the market turns unfavorable, or if we keep moving down like we have been as Bitcoin was rejected off of its 20-week moving average, then I think that's where it's easy to get in trouble. So the last thing worth looking at, and I think this is the most interesting chart, is the near Solana chart. So we can see that near has been in a long-term downtrend all through 2021 with relation to Solana. So getting rejected off of this upper level in January, and then again in February, and then again in March, and then again in October and November. And finally, it broke through on December the 8th. Now we can see critically that we are sitting right at a massive resistance level. So this is a level where we fell below in dramatic fashion back in April. Near the valuation of near in relation to Solana fell below this level in dramatic fashion, right at this 0.16 level. So we tested it again in May and got rejected. And that's what sent near in relation to Solana spiraling down. Okay. But then we broke above in December, and now you're seeing it test this level. And I think this is going to be critical because ultimately near and Solana and things of that sort are the ones which are competing to gain market share against Ethereum. Because we all know Ethereum has most of the market share, but then it's going to be who's going to capture the rest of that market share. And near is going to be one of those assets that's competing for that. And critically, with near now being listed on Binance US, that's going to open up this asset to a wide range of new investors. So I think that's why you're seeing us sitting right at this resistance level against the US dollar, against Bitcoin, against Ethereum, and against Solana, probably its main competitor at the moment. So this is going to be a critical moment. Now, typically, I don't like to invest into assets that are sitting right at these potential resistance levels. But notice that these potential resistance levels also offer you the highest amount of upside potential, because if it takes off right now, then you may not get another chance to invest at this level. So it all depends on your time frame. If you're someone who's invested in this asset for the short term, then this could be exceptionally risky. But if you're a long-term investor, then looking at this asset at the 0.16 level may be a great proposition for you, because quite frankly, we don't know exactly what will happen. We know that there's a mass quantity of institutional acquisition of the asset right now. We've seen it from Michael Saylor. We've seen the Luna Foundation acquiring billions of dollars of Bitcoin. And we're seeing this all happen right now as the market, the macro picture in the economy is looking rather poor. So it's a very mixed bag of things. And it's a very interesting time to be an investor with, in my opinion, there's going to be a lot of volatility that we're going to continue to see in the market. So this leaves us at the point where ultimately I do think Near Protocol is going to explode above these levels and start to capture a lot of this market share that Solana has taken from it and that Ethereum has always had. I think you're going to see Near start to move back up these charts. And now that doesn't mean Solana needs to be moving down, but the market cap of Near is much lower, quite frankly, than Solana. So it has a lot of upside potential left to go. And with the ability for US investors to freely enter into Near Protocol now, I think you're going to see it's going to be a matter of when not of if it explodes above all of these resistance levels that I pointed out today. It's just a matter of what will happen in the short term. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.